Hello and welcome to this week's episode of The Capitalist Investor. As always, you have me, Diamond Hands D. We got Luke sitting to the side, Lloyd, and Tony the Tiger. What's going on, guys?
What's up, man? Luke's sitting to the side.
Luke's working on his angles for the camera.
It's a game of angles here.
You know, after the Super Bowl and this whole weekend, I'm kind of bloated. So yeah. I found if I sit back a little bit, you know, my arms look good, my chest looks good, my gut looks kind of skinny. So that's a good posture. I should do this all the time.
All right, let's run with that, I guess. All right,
don't look as chunky as usual.
All right, so we're going to hit 4 topics today and a canceled. 4 topics, negligence over at Lyft. Some stuff happened after the bell.
That's a wild story.
Some crazy stuff there. Somebody got fired. Shrinkflation, the Super Bowl. We'll talk about who the winners and the losers of the Dream Team here picks on their picks. We'll talk about everything that was fun of the Super Bowl and maybe not so fun. Inflation coming in hot the other day, and market didn't like that, and we'll talk about why. And then canceled. Is love canceled?
Yes.
Is love canceled? We'll talk about it. We're taping this on Valentine's Day, so we're going to talk about canceling love.
I'm in trouble.
Well, you probably put yourself there.
I always do.
Probably. We all men put themselves there all the time. So
I just need to be better. Anyway,
first
one.
Negligence.
I
don't know. That's the first thing I noticed. So yesterday after the bell, after the market tanked and all that fun stuff, we had Lyft stock soar. I don't know. It was up like 65-70% after the bell, and then it like the CEO came out. Said, yeah, we posted some numbers wrong and the stock crashed. It still was up after hours, like 10%, but not 70 or 80.
Yeah.
Like, holy cow. Like, how does that happen?
Well, the question you have to ask is it on purpose, or is it actually just some CPA messed up in the reporting and the financial department just messed up by putting the decimal in the wrong place, whatever it be, right? Because they were supposed to report 0.5%, which is 50 basis points.
Right.
Instead, they reported 5.0% margin growth. So that's a 10 times bigger number than what was supposed to be reported. So my whole thing is, I love this actual take I saw on Twitter, or X, whatever you want to call it. If you are worried about shorts, in the stock market, if you go long, that means you're buying a stock. If you go short, that means you're betting against stock and you're going to sell the stock without owning the stock, right? There's a lot of shorts in like Lyft because they think Uber is going to take over the world and Lyft's going to be nothing. So Lyft does have a lot of short interest. So if you're worried about shorts controlling your stock and like beating down your stock, one way to destroy the shorts is to report a 10 times larger number than what was supposed to be reported, destroy all the stop losses on the upside for the shorts to cover, and then that way you just got rid of all the shorts.
So like the shorts got destroyed and they, I don't know. I mean, can you? It's
very illegal. Like if you actually do that on purpose in the SEC, like you're fine, you're like delisted. Like that's bad.
Of course.
but there's like you never know nefarious things.
I mean, but how much? I mean, I don't know this number, but like how much options trading is taking place after hours?
You can't trade options.
That's what I figured. Yeah. So it's like, so they got destroyed and then they kind of came back, but they still got destroyed because the stock, at the end when the dust settled, they were up 10%.
Yeah, but there's 13% short interest in the stock. That means there's 13% of the shares outstanding in Lyft are shorted. That's a lot.
Yep. It's wild to think about. But yeah, it totally worked.
if somebody had a game plan on that, like it worked. So, all right, we'll move on to shrinkflation. I believe what the Bidens are, President Biden's coming out and yelling at corporations for raising prices on people and not actually raising prices, but shrinking the products. Yep. I love. Yeah, keep on leaning, Luke.
Gotta look good. First these videos now on camera. Yeah, and we gotta look good.
So, what do you guys think? I mean, is this a corporation thing? Is this a stimulus thing? Is this printing? What do we print? $10 trillion or say $7 trillion that had nothing to do with inflation.
Well, let's clarify this. So people think sometimes shrink because it's been used in the retail side of things as theft. Shrinkflation is when you get a bag of Doritos and there's half the Doritos in there.
Right.
So there's not as much, bang for your buck per se, right?
I've experienced this firsthand.
Yeah.
Everyone knows I love my French pressed coffee, right? And the place I usually buy it from online, they got me.
Yep.
It's they've always been selling a bag for $15, but it was always 16 ounces. And then I saw that, the signs, the website still said 16 ounces, and I get the bag and it's 12 ounces.
Yeah.
That's a huge.
Yeah.
That's a huge
25%.
That's crazy. I mean, I guess people would have a inclination of well, if I went from $15 to $18, I'd rather pay the $3 and get my 4 more ounces.
Yep.
I don't know.
Well,
but
what's
I
interesting,
experienced it firsthand. I was very, very distraught. It's got me thinking. And now I'm looking for a new French press coffee venue.
Not going to go to Starbucks or Dunkin's.
No, not my game. Not my game.
I think here's my take is all you need to do is understand a little bit about the financial world, the financial markets, and understand that shrinkflation truly isn't really going on because earnings per share, aren't really that. Earnings are good from the revenue side of things and stuff, but the actual EPS, earnings per share, it's not growing a lot over the past year. Especially, we had flat earnings growth last year, right? So there's flat earnings growth. That means there's really not more shrinkflation going on to where they're crunching numbers and corporate America is making more profits. That's not the case. So all you need to do is understand a little bit about the financial markets to understand that earnings aren't growing, which means they're adjusting to whatever inflationary wholesale prices they're buying stuff from.
Yep.
Think about how the market is priced for perfection, because we had no earnings growth and the market was up 20% last year.
Yes.
Now they're expecting 11% earnings growth this year, and actually we are we're on pace to hit that this first quarter.
Yeah. I'll bring this up. I talk about.
I believe they're 9 or 10% right now.
Yeah.
What were you gonna say?
I talked about this on Maria. She asked me about shrinkflation on Monday.
Yeah.
And I thought my take on the Temu Super Bowl ad was kind of interesting, a little different take.
Which one?
So Temu was the Chinese company.
Oh yeah.
And they advertise shop like a billionaire on their thing, right? Middle class America is not shopping like a billionaire because of inflation, because everyone's getting hurt from inflation. But all we're kind of doing is making the Chinese company, other countries rich because we're taking money from the middle class. Bidenomics is truly taking money from the middle class average person and giving it to somebody else.
Yep.
Whether it's another country or the top 1%, all we've seen is the top 1% get richer here in America. That's Bidenflation, shrinkflation, whatever you want to call it.
Yeah, I mean, save that hot take for the Super Bowl section we got coming up. Your favorite ad.
That's true.
Your favorite ad is, I know what it is already. But no, it's shrinkflation. I think it's just psychology. Would you rather see a higher price or less product? And I don't think people look at, you buy a bag of chips and you aren't looking how many ounces are in this for the $3 that I'm buying. They don't do that. At least at Costco, they'll tell you the unit price.
Yep.
At least you can.
I'm a big fan.
Big fan of the unit price,
Yep.
right? But I think the psychology
is
where corporate America is getting good, because people aren't looking. Buy a bag of chips. I don't know if I bought a 12-ounce bag or a 16-ounce bag of chips, right? So I don't know. They're messing with your psyche, Luke.
Tired of it.
Derek.
Oh yeah,
messing with
brainwashing.
Yeah, they won't get me.
All right, Super Bowl. All right, so I think I was the big winner. I picked the Kansas City. I went with the experienced quarterback.
Yep.
I did win a Super Bowl square. Final score. Would have never figured.
What did that pay
I'm not going to talk about what it paid out, but it was a nice chunk of change.
Nice.
But who would have thunk how those numbers would have played out with 5 minutes left in the entire game? No one in a million years would have said, "Oh yeah, that's going to be the final."
Right.
But your boy did. I'm like, man, if this happened and this happened,
is that the first time that score's ever happened in history?
That score?
Yeah.
Probably not.
Because you could bet it. You could have bet on that. I saw that as a prop bet.
There's I think it's called Scoreagami on Twitter. So every time there's a new final, they post. So I see it every once in a while. But no, I think that score has been hit before.
One of the records that was broke was the longest kick, the longest field goal. It was only 55 yards.
Yeah.
I was actually surprised by that.
Yep.
But
It was broken twice in the same game.
It was actually.
Yep.
All right, so I think Luke, you said like what? There's 123 million people watch the Super Bowl.
Yep, record-breaking.
Right?
123 million.
Was that because of Taylor?
Because people are bored.
There's nothing now with football over. Yeah, what? This first Sunday is going to be rough.
25% of people watch the game not for football; they watch them just for the ads.
Mm-hmm.
That's an interesting take.
That is interesting at this point in time because the Super Bowl ads haven't been good in 15 years, probably.
Yep. The average Super Bowl ads roughly $7 million.
I felt last year was decent for the ads.
The average what?
Super Bowl 30-second slot.
30
$7
seconds.
$7 million. Yep.
Really?
Mm-hmm.
Wow. Well, I mean, I was somewhat surprised. I'm from what I saw based on what I was watching majority of the game. Like there was only one political ad, and that was for Kennedy.
Yeah, RFK.
Okay.
Right, and he did what do they call that? A reboot of his
It wasn't him. It was his super PAC that did it. He had apologized afterwards. On Twitter,
yeah, I did see that.
Because he apparently did not know anything about the ad. He kind of someone else ran it for him, essentially.
Wow. Well, I mean, he's
must be nice. 7 million laying around.
Right. Just throw that out there.
24 million or so was roughly gambled on the game.
24
billion was gambled on the game. Roughly, what was it? Was it 17 billion or
18
billion was spent economically? So bars, restaurants, going out to eat,
chips,
shrinkflation
on chips.
Yeah, you want to talk about shrinkflation. Remember when you used to order wings and you used to get a dozen? Now you get like 5.
Or it's $20 for 12 wings
exactly.
or something. Or $18. I mean, like I remember going and it's like a quarter a wing.
Do you know why? I think. So wings used to be like the most disgusting thing in the world. Like for some reason, like B-dubs and other people, like other companies changed their perspective on wings, and now it's perceived as more of a luxury and like a sporting thing, right?
Mm-hmm.
So that's one of the reasons we've seen wings go up in price. They're now like a luxury.
I've always looked at wings as a luxury.
Me too.
I mean, how do you think
how
do you get through college, man? Is you go to a wing night.
25% of Americans, adults, had gambled on the game. So total of 24 billion. I want to hit on that real quick.
How many people do you think? How much was spent? Maybe like last year, or
yeah, it was like 16. It was like 50% higher gambled on the game. So two things there. Obviously, more legalized kind of things that I know in Ohio, sports betting is legalized now, so that obviously has something to do with it. But gambling, in my opinion, is actually not a sign of strong economic data. It's not like a strong signal. It's a weak signal, meaning that people are desperate for money. You know, obviously gambling's not a way to make extra. It's not you shouldn't gamble to make extra money, but it's a way to kind of perceive that people are desperate. They want more money. I think that's a sign that there's some underlying economic issues, especially from the middle, lower class from a gambling perspective on the Super Bowl.
I would believe that.
Yeah, absolutely.
I believe that. I believe that, like with so one of my family's guilty pleasures, maybe not particularly mine. I'll dabble, but like instant lottery tickets, scratch offs, like that is, like there's a reason why they're in convenience stores. I don't think Jeff Bezos is walking into like a
7-Eleven buying $20 of scratchers.
Right. So I do believe that. I believe that gambling is geared towards the middle and below classes, right? And it is what it is. It's just because they can work so hard, but they don't have the the means to get a job of that's going to pay higher or whatnot. So how do you do it? What's $10 can turn into $1 million overnight.
Parlays, man.
Parlays. three leg parlay pays 5 to 1.
That's right. That's right.
But the biggest winners out of this, though, I mean, is like DraftKings and FanDuel.
Yeah,
have to, because now that legalization on an app is becoming more mainstream, and there's so many commercials for it. I mean, it's just beating you over the head over it.
Oh yeah.
I actually. I think like ESPN, they had an entire 30-minute section from DraftKings, and all they were doing was talking about their app and how easy it is to hit a parlay and all this stuff. And I'm like, holy cow, like a 30-minute infomercial on ESPN for DraftKings over this weekend. Yeah. It blew my mind, actually.
I will say I am a dunk king. I am a dunk king.
All right. So favorite commercials.
That's right.
Yeah, that was pretty good. And I think the best part of that whole Duncan commercial was Matt Damon. And then he hit us with that Goodwill Hunting.
Yes.
Yeah. So
apples, that one.
How what did he say? Like how about that cup of coffee or something?
I'm sorry.
And you know what the funny part is? Like I'm not too into like celebrity dating game. I forgot that J-Lo and Ben Affleck were married. I thought they were broken up.
That wasn't Beyonce.
She looks good.
Yeah,
blonde hair now, right?
She does not look 40-something.
I saw.
You can't be talking like that on Valentine's Day.
Beyonce and Jay-Z got put up there on the old television during the Super Bowl, and did you see who else was in the box?
No,
is Jack? What's his last name? The former
Dorsey.
Dorsey. There you go. Just looking all weird with like a Bitcoin T-shirt on.
Satoshi. That's why Bitcoin's at 52,000 right now.
Is it 52 now?
Yeah.
Wow.
Should have picked some up.
Yeah. I mean, what was like last week? It was 42.
Yeah.
Was it not?
Yeah.
Pretty much. Wow. Well, people must be buying those Bitcoin ETFs.
I support.
Yeah.
Too much money out there, which is why inflation came in hot.
Right. But now, hang on a second, though. Like, really quick, though. The worst ad. And you hit on it earlier. It's that. I don't even know what that. I didn't even know what that app was.
So Temu is a Chinese app, kind of like the Alibaba. I think it's owned by PDD, is the publicly traded company that owns Temu, the majority stake in Temu. Essentially, there's concerns, and there's political takes around this too. Like, Temu and PDD, it's backed by the CCP, right? Mm-hmm. So $15 million essentially being spent. I think they ran 2 or 3 ads, so roughly $15 million being spent on these Temu ads, and one of the biggest chance. And frankly, it looked kind of cheap in my eyes for spending $15 million. But there
were several ads, and just tell people what they do. My interpretation of what this app and this
it's like an Alibaba.
Well, even more granular is more like you can go and buy a pair of jeans for $5.
Yeah.
Like it's super cheap items that you can buy on an app.
And
so the next thing you know, you got a cart full of 10 things and you're spending $40.
Yep.
And I heard like some people told me like, oh yeah, you can use these apps.
Well, people say it's so cheap because they're using slave labor still.
That and then plus like if you buy it, they'll like you can get a refund and then you don't even need to send it back because it's going to cost you more to send it back than what you actually spent on the product. Like, it's just head scratching to me.
I just hate the whole shop like a billionaire thing because I don't know. Like, it rubs me the wrong way. Like, America in general, like, we've had a symbiotic relationship, I think that's the term, with China, where we've helped each other grow, but we've helped make China rich, essentially. We've helped China shop like billionaires, right? And I don't necessarily like, especially things backed by possibly slave labor, possibly backed by CCP, like communist China. I don't necessarily like that getting involved in our American Super Bowl politics and us supporting all the things that are happening over there. It rubs me the wrong way.
Yeah, but
because people in America can't shop like a billionaire because we're still worried about affording our daily groceries, rents, and things like that.
I mean, but the visibility in China right now is very difficult to see because they're communists. Like they can lie, but if you read you got some of their biggest real estate companies going out of business, and they're talking about going into recession and stuff like that. So, I mean, I guess this is a way to stimulate their company. Or their country is by having ads on the Super Bowl where every American's watching. Yeah, I don't know. Maybe it's a form of, highly sought after marketing. Like it's smart marketing by them. I know I'm not gonna download the app and go mess around. But
my girlfriend was talking about it. She's like into crafting and stuff. So she was like, "Hey, I love Temu ad." I'm like, "Shush, stop."
It's outlawed. It's outlawed.
I got to educate you a little bit.
It's outlawed in this household.
Get spied on TikTok and Temu through her apps or whatever. I don't know.
All right. Inflation. So inflation came in quote unquote hot yesterday. So, the analysts were expecting a 2.9% inflation rate, and it came in at 3.1. Therefore, the market corrects 2% or 1.5% or whatever it did yesterday. But it was all over the map. It started off at 1, went to -2, down to -1.5 or something like that. And but you know who got like the mid caps? You know, the Russell 2000 got hit the hardest.
3.5.
What's it? Yeah,
like
down about
3.5.
3.5. And now that's got to put them. That puts the S&P 500 at around a 4% positive for the year. It puts the mid caps at about -3% for the year.
Yep.
What a disparity that is. And think about the psychology of that. Like my take would be that lower, you know, the mid cap and small cap type of companies just have more debt than larger companies, and their margins are probably already tight. And when interest rates are not going to go down and debt starts refinancing, or they just need to get more debt to excel their business, it's at a higher rate. You know, it's not low single digits anymore. It's mid to high single digits. And that's a huge margin compression. And that is why the mid caps are going to possibly struggle.
I like that take. I mean, you can think even broader and bigger. It's all about the Federal Reserve rate cuts. Like, obviously, like you kind of hit about on like the initial reaction in the bond market priced in the rate cuts. Beginning of this year, it was 6 rate cuts being priced in. Then it went to like 5 or 4 after the Jay Powell went hawkish on 60 Minutes like 2 weeks ago.
Yep.
Now it sounds like 3 again, which is where the Federal Reserve wants to be. It's like, what happens next month, 2 months? Are we going to be down to 2, 1, 0? Are we going to have any rate cuts this year? It's like, what's actually happening? The thing is, again, this is what we talked about before. Rate cuts are actually not necessarily a great thing. Like,
No.
if this is the long-term terminal rate to have inflation drift around the 2.5-2% level, then this is the rate to stay at.
Right.
It's like I call it instant gratification. Right. It's just like having a gambling app, like a DraftKings app. Like I need to win $10 right now. Well, the market saw a historic rate hikes last year, and now they're like, okay, well that was fun. Like now what? And they don't like the pause. No one likes the pause because there's no quote unquote action.
You hit the nail on the head. It's gambling. Market is now a gambling tool. Everyone wants 20% rate of returns every year. Mm-hmm. So if they don't get the 20%, they're going to be upset. And that is going to get a lot of people in trouble.
And even 20% sometimes people are like, that's not enough.
Yeah.
Seriously?
Seriously. Yeah. I mean, if I get 20% pop on a stock in my personal account, it's because it's a low position and it was highly speculative. You just don't roll out of bed and get 20% on a stock market. At least people should understand that. But so here's I keep on thinking about this. Like, what would happen? And I talked to my, the investment team, and they laughed at me. What if we had a hike before a cut? Could we?
Sure.
I mean, anything's possible, right? But I mean, I guess inflation would probably have to really start soaring, like get up into the 4s.
If we see 3.1 go to 3.3 and then 3.5,
back
on the
I mean, you
table
start
for sure.
seeing it accelerate again.
Yeah.
I mean, I guess it would be the rate of acceleration. Like if it goes to 3.1 to 3.3 to 3. I mean, I think if you saw a 3.1 to go to 3.6, it would really, really rattle this.
I kind of like
market.
Michael Gade. People say, talk good and bad about him both. I know Mark's been on his podcast, but he's very outspoken about like a credit event is still going to come. And like his philosophy is the only cure to the interest rate, high interest rates, the only cure to inflationary pressures is some sort of credit event like Silicon Valley Bank, but probably in a bigger level.
Yeah. All right. Well, we got to get wrapped up. So let's talk about canceled. Is love canceled? Because the reason that
my generation, yes.
Yes. Well, because and this ties into your generation. There is now a dating app that the only way for you to mingle and get a date is that you have to have a credit score over 650, which is,
it's a pretty low bar.
It is kind of 650. I mean, I don't know. I mean,
don't you just need a credit card for that and not miss a payment?
Exactly. You could have $100,000 in debt and probably still have a great, a great credit score based on maybe how much money you make and stuff. But if you don't miss payments and you're not upside down on like missing payments and stuff like that, your credit score should be okay. Mm-hmm. I would assume.
Yeah, I'd say love is dead. I mean, I understand where they're going, right? You know, you want to have, you know, sound, you know, financial knowledge and things like that. But
I think people
you can have a good credit score and it not even be your fault, right? Especially when you're young. You can just have parents that are paying off your credit card for you. Like, it doesn't necessarily mean like you're a good person if your credit score is over 675 or even know anything about money.
Right. You just have a credit score. Like,
exactly.
like I like that. Like, hey, my parents have been paying my credit card forever.
I got great credit.
I got great credit.
Mommy and daddy are sending me, you know, 2 G's a month.
My credit crashed after mommy and daddy cut me off.
That's what people want. Honestly, I think people would rather have that though than actual love. Because if your mommy and daddy actually has the money to support you, that means your family is pretty wealthy. And frankly, my take is younger generations, they care more about the money factor than they do actual about the love. 100%. So love is dead. Money is not dead.
Well, I think the statistic is 25 to 40% of all problems in a relationship are related around money, right? So, yeah, I mean, I guess a good credit score is a good launch pad. But here, did you see this? Like Tinder wants to have an app, or they want to have a section of their app where it's $500 a month to subscribe. Now, my mind went in a completely different direction on this, but like, think about who's going to be on there. You're going to have affluent people and not affluent people.
What would you do if you were single?
I mean, but dude, like, there's other apps for this kind of stuff. Like,
I don't know. It's like social clubs. You could join a cigar club, social club. You know, usually there's a fee, a membership, country club. There's a reason why they have fees. It's not necessarily to make money or necessarily to give you all these services. It's to filter out other people, social groups, right? Sure. This is another way to do that.
Yeah. I mean, if you belong to a golf course, like a country club, like, you know, I do belong to a country club. I'm very passionate about golf. That's like one of my, what do you call that? Like
vices? I don't
know.
Not
vices, but like guilty pleasures. Guilty pleasure. But man, I can have a round of golf done in 3.5 hours. If I go to a public course, it might be 6.
Right.
And it just takes away an entire day. You know?
I'm just saying, love. Yeah. I think today's generation would be willing to pay if they have the money, resources.
$500 for a dating app, like that is not. It is no longer.
You pay
$500.
You meet someone else also willing to pay $500. You must have some money. So therefore, in the long term, you just join forces and hopefully you just make profits.
That is. I'm just gonna. Call, you guys can read between the lines, but that is not a dating app. That is something else. It is something else.
I don't know. But my girlfriend's mad at me. I'm going to New York again this upcoming week. I'm filling in for Mark again on Maria next week on Monday, and she's coming with me because she's able to work from home, and she also keeps me in check when I'm out there. Like, as in, like, she kind of helps me out getting place A to point B, point A to point B, and kind of like it's nice to have someone out there because I get kind of lonely out there sometimes. Anyway, so she's coming out. I'm gonna take her out to dinner for Valentine's Day this upcoming weekend out there.
That's nice.
So we're not going to do anything today, and she's kind of upset about it. You know, again, it's like birthdays. It's not a day. It's like then it goes into the weekend, and then it's like a month. It's like relationships nowadays. You have to have like Valentine's month, not a weekend or day, whatever it be. So I think we're grabbing wings tonight, talking about wings. I don't know if that's a good Valentine's date or not. I'll bring flowers. I'm kind of in trouble.
My little girl loves spaghetti, loves it. So we're going Italian tonight.
Nice.
So how about you? Wings?
Not wings. You know, I think we're just gonna grab something at our local restaurant that we like.
Okay.
So just grab a quick dinner.
All right.
My kids are 4 and 6, so anytime we can eat out, there's not a giant disaster on the floor and counters. It's a 20-minute cleanup process just for them. So yeah, looking forward to it.
Yeah. All right. Well, love may be dead. It may be alive, Luke.
Not for us.
I don't know, man. Maybe you're looking through the wrong lens, man.
Mm-hmm.
Maybe you're looking through the wrong lens.
I'm just such a pessimist. I need to stop it.
All right, everybody. Take us home, Derek.
All right. Well, thanks, everyone, for listening. If you have any questions, hit us up at info@swpconnect.com, and we'll talk to you next week.
The opinions expressed in the podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any investment, legal, financial, or tax strategy. It is only intended to provide education about the financial industry. Please consult a qualified professional about your individual needs.